Hi, good evening, students. We can just give Mr. Kamprov Posen a minute or two to join us, please. And then we'll start.
All right. Thank you.
Okay, thank you. Yes, sir. How can I cut? Hello.
Hi, Claudine.
Yes.
Charles is going to join the session in a minute. He was just in a
No, it's
different
fine. I
group.
did just tell the students now that we're just going to
Okay,
give him a minute or two to join. So it's fine.
100%.
I did make an announcement.
100%, no problem. Thank you, Claudine.
Okay. It's a pleasure. Okay. Students, just once again, just give Mr. Posen a minute, please, to join us.
Not a problem at all.
Okay.
Good evening, everyone. Sorry for the delay. There was a mix-up with the links. I'm just waiting for some of the other students to join, and then we will start.
Okay, thank you, Charles. Good evening. I'm out of here.
Thanks.
If you need anything, I'm your support for this evening. You can send me a message.
Thank you, Claudine. Much appreciated.
Okay, pleasure. Bye.
Thank you. Bye-bye. Guys, in the meantime, if you guys can please copy your student number into the chat section. That is the form of attendance that we are keeping at the moment. There is no link to another attendance register, so please copy your student number there. I'm going to wait another 1 minute or 2 minutes. Let's make it 2 minutes, and then we'll join. Okay, guys, I think we can start finally. Apologies for the delay once again. It was a slight mix-up with the links. So just to start off, what to expect of tonight's session. First up, participation. The exams are around the corner, so it is a general expectation, and I know I'm going to sound like a typical high school teacher here. You should have gone through the material already, but don't despair if you haven't done so yet. This is why this session is there as well, is to make you aware of what is important, what you still need to grasp, what you are comfortable with, and then you can take that away from the session and go practice the parts of standard costing that you are not yet very comfortable with. Secondly, this is mainly a third year session. As I've posted in the WhatsApp group, we will mainly be working at a third year level, but since this is the first class of standard cost, first session on standard costing, it will be a lot of introductory work as well, which will benefit if you've joined and you are still doing 2601. So I would recommend that you stay. And as you guys might have seen, especially the third year students, your second year is the base for standard costing. You really have to know your second year stuff very well. Otherwise, you are not really going to be able to do as good in this session as you would have wanted to. Third year level is a lot more interpretation. You will be asked to interpret the variances, and whereas in second year, most of the question would have been the calculations. So second year was a lot of calculation driven. Third year is going to be interpretation driven. You are going to have to discuss why there's a variance. What effect will it have on the company? What must you do after you've discovered the variances? What is the final conclusion that management need to reach? Was there something wrong with the standard costing itself? Was there something wrong with the budgeting process? That the actual figures did it contain errors on management side? So meaning the standards that was set, the budgets that were made was actually achievable and not unrealistic. So you have to get to that conclusion at the end of your calculation. So let's quickly go through the basic introductory points before we start. First up, number 5. yeah, we're getting close to the exams, so time is running out. But if you haven't done so yet and you would like to, you are welcome to send your module code and your name to that WhatsApp number. I will add you to the group. But it's very important that you do send your module code as well and your name. Otherwise, I wouldn't know what to save it as. If you don't want to send your name, send us at least your student number. Then I can save it as that. One-on-one consultations. The time is running out, is all I can say. I'm already fully booked from 12 o'clock on Saturday until almost 7 o'clock Saturday on consultations and one-on-one sessions. Please make use of that. That is a benefit that is provided to you free of charge by Unisa. We can work around a problem that you have that you wouldn't like to discuss in a group. I'm also going to use that consultation sessions to schedule group sessions where we will, as a more bigger group, address, for instance, matters stemming from standard costing, where we can do an exam question, not a lot dissimilar to what we're going to be doing tonight, but it might benefit you a bit differently. So you can use that one-on-one consultations. If you don't know how that works, please follow in the chat section. There should be a link to the consultations. If not, send me a WhatsApp and I'll send you the link. And then what you do is on Unisa's website, you go and you log a query. I will receive it and then I will attend to it and I will arrange with you a date that suits both of us, that we can tackle whatever it is that's bothering you. Then attendance register, there's no more link to a attendance register. Just please copy your student number into the chat section. And then finally, after the session, if you guys could please fill in the session evaluation form. And I think that is that. I just quickly want to share the tablet screen before we go to a very short presentation. Tonight's all about practice and doing the formulas in a questions setup. So I don't want to bombard you with theory. You guys have the study guide, you have the material, you need to go and study it. But as you guys might have seen already, this is a purely application setup. You need to understand. And I think if there's one thing that you remember from tonight's session, is that when you study the formulas, and I think I've included it in my slides, when you study these formulas, don't study them to remember them. Study them to understand them, because then it makes sense. And the moment something makes sense, then you don't have to remember it, because then you will in the exam read the scenario and you will logically arrive at what you must do. But now we are very prone to, the moment we see a formula, to learn that formula and to study that formula and remember it like a parrot. That is not what you have to do. There are too many formulas. You need to understand what are the variables in that formula and how to apply them. That is probably the biggest skill for standard costing, and that factor alone is why standard costing is difficult for a lot of students. You need to understand the whole concept. So when you study, don't study anything to remember, study to understand the concept, because the moment that the concept click, then you don't have to remember the formulas anymore. You just need to know that there can be a variance. The variance can be a variance on material, and it can be a price or a usage variance. How do I calculate that? But if you don't understand what standard costing means, you wouldn't be able to calculate that variance. So first you need to understand what standard costing is. Let me just quickly share my screen here. you guys should be able to see my screen now. So just to give you the reason why we have something like standard costing as a recap. Like I said, a lot of tonight is going to be recaps because you have to have a solid foundation to understand some of the more in-depth questions they can ask at third year level. So when we look at standard costing, it speaks to budgeting. So there's a direct correlation between standard costing and budgeting. Standard costing is not the reason you don't reach your budget. Okay, so that is not the case. Eventually, we're going to compare this to an actual result at year end. So there will be a variance between the actual and the budget. But then management would like to know what caused the variance. And then we will look at standard costing because we applied a standard to usage and price. So we said a specific product that we are going to produce will need an X amount of, let's say, usage or quantity. We'll use an X amount of material, and that material would be sourced at a specific price per unit. So if we arrive at our actual figure, we need to go see if there was something wrong with our standard that we applied, because that will result in us not reaching our budget. But then we need to, at the end of the day, and this is specifically at third year level, determine was the variance due to two things. Either there's a problem with the standard. There are many reasons, but most of those reasons stem from one of these two. Standard must be adjusted. We need to revisit our standard, or management. Ineffectiveness. Because that might be a reason. Because management might have budgeted wrong. And that is why we have a problem. Or we said our standard was a problem with our standard. If we computed our standard correctly, we might not have had these variances when we compared to actual and then budget. But since we are in a period where there's a pandemic, there's a very, very probable third reason. Management might have been effective, the standard might have been perfect, but there might be environmental or economical factors that you need to consider. Let's take COVID, for example. And I wouldn't say there's a COVID question in the exam, and because COVID will give rise to variances, because the actual and the budget won't speak to each other, and management would immediately go and look at the standard that we applied and see, okay, although we didn't read our budget in terms of quantity that we wanted to sell, would we have been in budget if everything happened in terms of that quantity? If we reached that quantity? So we can still calculate that our standard might have been perfect, management was effective, but because of factors outside of our control, and that's the main thing here. Stuff we have no control over might also have affected the situation. If you think about the economic recession and all of that. So on third year level, don't just get stuck in the calculations. Yes, we are going to focus a lot on the calculations, but don't throw away those 2 marks, 3 marks, 4 marks that they ask in addition to the calculations. Because if you tally all of those up, it gets you to a point where you could have passed if you just answered those questions logically. So don't just focus on the calculations, especially on third year. So anything else that I wanted to say? No. Okay. I think we can quickly go to the slides and then we can move on to the questions. Okay, standard costing. So important. So here are some important exam preparation points. What I've just explained: budget versus standard versus actual. Understand the correlation. Variances are the most common examinable question. Standard costing combines well with inventory measurements, weighted average, first in, first out. It combines well with absorption costing. So standard costing is a very important topic. And it isn't that difficult to understand, because that's the key. The moment you understand the formula, what it really does, then you don't have to remember it. So please, if you take nothing else from the session, take that you need to go and understand what it does. So don't study the formulas, understand them. Variance, obviously we look at the actual versus the standard and interpret the variances, very important. Especially third year level, they will ask you that question. Previous knowledge, remember the standard costing system, calculating the selected variances, and recon and analysis of variance. So very important. That is second year level. Make sure that you understand your second year level stuff exceptionally well. Okay, let's quickly discuss, give a run through on variances. So first up, the difference between standard cost and the actual cost of manufacturing the product. That's your main variance. The standard cost and the actual cost. Secondly, is the difference between the standard selling price and the actual selling price. So what we thought everything will cost us and what we thought we would get. Those are the two. All our variances start there, and then we break them up into more branches. When calculating the price and the rate variance, quantity hours remain the same. Just some update from last year. When calculating the price or the rate variance, the quantity will stay the same. In other words, your usage. We compare the standard and the actual costs. When we calculate the quantity or efficiency variance or the usage variance, we take the price and the rate and we keep it the same. And we compare the actual and the standard quantity of hours that was used. Guys, I might be talking a lot, but if you have any questions, this is your session. Please unmute and ask me that question. Okay, moving on. So with all the expense variances, whenever the actual cost is more than the standard cost, the variance is favorable. With an income variance, whenever the actual price is more than the standard price, the variance is favorable. Okay, you guys happy with that? Just some basic principles that I want you guys to remember as we start with the first question. Okay, the first question, I'm just quickly going to unshare and put it on the screen nice so that you guys can see it properly. Just an opinion. I just want to ask you guys: is it too big or too small on the screen? Will you be able to read it if I minimize it like that before we go through it? There's no complaints. Then I'm gonna.
We can't see it yet, Charles.
We can't see anything, sir. There's nothing now.
We'll just try and unshare and share again. Please let me know if you guys can see it.
Yes, sir, we can see it.
Can see.
100%. Okay, so this is, like I said, it's a second tier question, but we're going to there, and then I've already sent over WhatsApp the third year level questions to you. Okay, so STG Limited uses a standard costing system and manufactures a single product. The management of STG Limited has compiled the following standard cost information sheet. So the CANEV, or I don't know how you pronounce that, product standard cost for the month ended 31 October 2013. So there they give the direct material, they give the quantity, they give the standard price. Then they give total material cost, they give you direct labor, job number, standard hours, standard rate per hour, and then the total labor cost. Then they say the standard variable manufacturing overhead rate per unit of production. And there's all the question marks. Let's see what the additional information gives us. No fixed manufacturing overheads were incurred by STG Limited. The following information is available regarding the variable manufacturing overheads of product Crazy. Oh, yeah, sorry. There we have the, sorry guys, something doesn't look right here. Guys, just send me a WhatsApp as a reminder because of your question bank and something doesn't look right here. Guys, I'm going to leave that question as I'm not sure what's happening with that question, but I must notify you of that question afterwards. So please send me a reminder. It was actually in your question bank. Okay, let's focus on this question. Nason Limited manufactures plastic chairs and uses a standard costing system. The following is standard variable cost per chair. Plastic, 6 Rand per kilo and 15 Rand. Labor is 1.5 hours, 18 Rand 75. Variable overheads is varying with hours worked, 1.5 hours at 9 Rand per hour, and then varying with production, 7 Rand 25. The following are the actual results for March 2014. There they give us the plastic purchased, the labor, the variable overheads, the varying with hours worked, the varying with production. Then they tell us the material purchase price variance unfavorable and the labor rate variance favorable. And then they give us the sales. Additional information. The budgeted selling price is 50 Rand per unit. 12,000 units were manufactured and sold during March 2014. There were no completed units, work in progress, or material on hand at the beginning or end of March. Then they ask us to calculate the actual material purchase price per kilogram, and they ask us to calculate the material quantity variance. Let's start with A. Can I ask you guys to please give me the actual material price per kilogram? Let's say 2 minutes. If you guys are done, you can just raise your hand on the hand function, and I will get an estimate of where you guys are. So guys, just to see, I see some students that joined. All I want is for us to calculate part A first, the actual material purchase price per kilogram. So just to give you guys a hint, if I may, let me quickly put this up. Remember, what we want is we want to say what is the actual quantity. Well, let's do this. We want to say what is the actual quantity times the actual price, and we want to compare that to the actual quantity at standard price. You guys happy with that? That's what we're trying to do. So substitute, because this will equal the variance. Sorry, Kurt, are you done or do you have a question? Apologies. Is it, yeah, if you guys are done, you can just raise your hand.
Sorry, Charles, I was speaking to myself there for a moment. I'm done.
As long as you didn't answer yourself, Kurt, then I don't think there's anything to be concerned about. Thanks, Kurt.
Sir, I'm finished.
Thanks, Rian.
Hi, Charles. Hello.
Hi, Claudia.
I don't know what. I don't know what did I. But I keep on hearing myself over and over. I don't know what is wrong with my audio, but I only heard you now since you started.
Okay. So can you see the screen?
Yes, I can.
Okay, so
I
we
only
want to
hear Kate when Kate was speaking. That was the only time I hear everything.
Okay, 100%. Claudia, so I would just want you to calculate part A for us. But I'm gonna start in 1 minute or so. I'm gonna continue with the question. So read through the information and then we will attempt it together.
Okay. But can you hear me clearly on your side?
I can hear you clearly, Claudia.
Okay.
Okay, guys, let's work through it together. So first thing up, they say there that the material purchase price variance is 7,000 Rand unfavorable. Okay. So we know that if we look at the approach that we said we were going to take, we already have the variance, and we know it's unfavorable. Okay. So at standard price, they say plastic at 6 Rand per kilo. And we've purchased 28,000 kilos, and they said that we used all the units. There were no completed units, work in progress, or material on hand at the beginning or end of the year. Okay. So we know that we have to say it is 28,000 kilos times 6 Rand. And that equals on the other hand, okay,
168,000.
100%. And on the other hand, we also have actual quantity times X. We don't know what it is. Let's leave it at AP. So that means we need to calculate the difference between that value and that value, and the balancing figure, or if we calculate it, we will get, what will the answer be?
Minus 7,000.
What will the price per kilogram be?
6.25.
100%, because we have to say 28,000 kilos times the actual price, okay, minus 168 equals 7,000. Because that's how we got to the 7,000 in the first place. And then we just solve for AP. So 28,000 kilos equals 168. Let's take all of that to that side. So it's 7,000 plus 168. So kilograms equals 175. Well, AP equals that, so 175 divided by 28,000, and that equals 6.25. Everybody happy with that?
So it is 17,500 to take a zero away.
Where now?
You said it's 175,000. Is that what you said?
But it should be 175,000.
Okay, and then you're right. Okay.
Am I not?
No, that's correct. It's 175.
Okay. Any question on how we got to that? So again,
No
this
question on my side, sir.
witness, just say again.
No question on my side, sir. Thank you.
Thanks for that. So all this question proves that if you understood the formulas, understood, not remembered, understood, you would have known how to get to the variance or what the variance means. And you would have been able to understand that you will have to balance, that there needs to be a balancing act going on here. You have to substitute and use a bit of maths to get to the answer that's not so straightforward as usual. So this was part A.
Sorry, Charles, before you move on.
Yes, good.
I just have a very standard question.
This is the place to ask that.
An unfavorable variance is always actual more than standard.
Correct.
Okay, thank you.
Unfavorable balance means there was the costs exceeded the budget. So, and that because that's with an expense. If it was the other way around, if it was a sales price variance, then it would have been a favorable balance.
So if I use the 15 instead of the 6, is that wrong? I get the same answer.
If you use it, just explain again.
If I used the 15 at the top for the standard price as 15 in your question, can you see 15?
Yeah, I see what because you took the usage into account as well.
Yeah, so
Okay.
it's 15, and you get basically, which is 2.5 is your difference, which is negative 7,000.
Rian, to answer your question, you're actually I'm going to answer you indirectly. Firstly, if you got to the same answer, yes, then it's great. I'm happy if you got to the same answer, because then but then you must just make sure it's because you understood, and it wasn't by accident. And I'm not saying it's by accident. You will be the judge. Why I'm saying that is you can get, especially on third year level, they can play around with the inventory, because on third year level you will have opening and closing inventory, and then you have to decide, what am I going to use? Am I going to use the standard cost, the standard usage, or am I going to use the actual usage? And that there they might throw you out a bit if you don't follow if you didn't understand how you got to this answer. Because to remember, if the question says the company is following a standard costing system, then you use standard input. But if they say they apply FIFO or weighted average, then you must use actual input. But that's a bit further down the line from where we are now. But just to park those terms in your mind, that you must take note of that. But no, in general, if you understood it and you did it correct and you got to the same answer, then I'm happy.
Thanks so much. Thanks.
Okay, guys, next up. And I'm gonna, I think we're gonna quicken the pace a bit. Please calculate for me B, C, and D, the material quantity variance, the actual rate variance, and the labor efficiency variance. If you want to ask any questions, please ask, but let's say 6 minutes tops. And please raise your hand if you guys are done.
Can you please scroll up a bit so we can see the... Okay, thanks.
Guys, just remember to please post your student number in the comment section or the chat section. And yes, the recording will be available later. We will post it by the next class. It will be in the chat section of the same link. Okay, unless anyone is going to tell me to just wait a minute, wait a minute. I quickly want to look at B. So here they want to calculate the material quantity variance. So the moment that we are now moving to the quantity variance, it means that the prices will stay the same. We need to use standard price in both equations, but the quantity will change. We will match the actual quantity against the standard quantity. So if we do that, excuse me, it's the actual quantity times the selling the standard price. So that's the 168 we got from A above. Okay. Then they say that the next one is the standard quantity times, not minus, sorry, minus the standard price. But do we have the standard quantity? We have to calculate the standard quantity. How do we do that? Go to the question. So the question says we need, where am I now? Okay, so there's the 15 Rand and we use 6 Rand per kilo. So we need to say 15 Rand divided by 6 Rand gives me 2 Rand 50 per kilo. Correct? Siyabonga, you've got a question?
Oh, sorry, Charles. I have a problem with the internet on this side. Sorry, man.
Okay, no problem. I just noted that you're unmuted, so I thought you might have had a question.
Okay, sorry.
No problem. Okay, so that's 2 Rand 50 per kilo. So how many units did we make? How many chairs? 12,000 chairs. So that is 2.5 kilos times 12,000 units. And that equals 30,000 kilograms. So now we can go and we can say, any questions?
Go on, sir. Thanks. Go on.
No problem. Okay, so there we have, I'm going to take it off that arrow. So we have 30,000 kilos, again, at the same standard price of 6 Rand. So what do we get? What variance do we get? Favorable or unfavorable?
Favorable. 12,000.
100%, because that is what we paid. And if our quantity was the same as what we've budgeted, we would have paid that amount. So it's a 12,000 Rand favorable budget, a favorable variance. Everybody happy? Okay, I'm going to give a few more minutes for C and D. Let's say another 2 minutes.
Charles, will you please show us the required again?
Hi, Charles.
Sorry, guys. Yes, I couldn't determine who was first. Are there any questions?
Yes, please. Can you go back to the slide with the calculation? Okay. How did you how did you get to the 12,000 favorable? Are you using the very same 12,000 in the given information, or how did you calculate it?
It's the difference between the 168 and 180.
All right. Thank you.
100%. Kurt, I think I heard you want me to go back to the information.
Yes, please. Thanks, Charles.
100%.
Let's do the questions again for D and E. Or C and D.
Just let me know when I can scroll up again if you guys have got the questions. So just C and D. You guys can wait for E a bit. Just C and D. Can I go on with the actual labor rate? Okay. So again, they ask us to calculate the actual labor rate, but there's information that we need to calculate, and it's actually more than once. So we obviously need to calculate the rate per hour. We need to calculate, and we also need to calculate the actual rate per hour, which is not known, because we have it's not given, but we do have a variance, and they say that it's a favorable variance. of 5,000. So it's given, we must almost work this out the same way that we did with A. So again, we keep the price the same. It's the actual quantity or the actual hours times the actual price or the actual rate. And we measure that against the standard quantity or the standard hours times the standard rate or the standard price. Yeah, sorry. Why did I write that there? Apologies. Standard price. Sorry, guys, I don't know where my eyes were, or my thoughts were actually. We want to measure the rates. We want to see did we variances and whether what was the reason. But now they give the variance value to us, so we need to work back the same way as we did A. So again, we will say it's 20,000 hours times the actual price or the actual rate against 20,000 hours times we need the rate. So how do we calculate the rate? Let's go back to the information. They say the labor hours is 18.75 Rand, and that is equal to 1.5 hours. So we need to say 18 times 18,75 divided by 12. 1.5 by 12. 1.5. And then we get 12.50
12.50
per hour. So times 12.50. Okay, so that equals then 250,000 hours. And then we have to do that whole thing again where we say what the variance will be. Same story where we say 20,000 AP equals the negative, because we're now taking it that side, we're changing the signs, 5,000 plus the 250. Everybody still with me? Everybody still with me?
With you, Charles.
Thanks a lot. So if we do that calculation, we get 245. So then we say AP equals 245 divided by 20,000 hours, and that brings us to an actual price or actual rate of
12.25.
100%. So I'm going to move on to the next part as well, where they say calculate the labor efficiency rate for D. So this is the same as the material quantity or usage variance, where we say we need to work with the actual hours at the standard rate. But then the term changes a little bit. It is the actual hours allowed for actual production at standard rate. So it is the actual hours or actual, let's say actual hours times the standard rate minus the actual hours but is it just the actual hours? It's the actual hours at actual production times the standard rate. So again, if we work with efficiency or quantity variance, the standard rates stay the same. When we work with the price, and we go to the top one, the actual quantity stayed the same. Everybody happy with that? Okay. So what was the hours that we used? It was 20,000 hours at 12.50 Rand. And how many units are we allowed to use? We are allowed to use 1.5 hours per unit. So we produced 12,000 chairs at 1.50 Rand, which equals 18,000 hours. And then we say that is at the standard rate of 12.50 Rand. And that equals, anyone have an answer for me there? And if you guys don't understand what I'm doing, please ask that we can explain. And
225.
225,000. 225,000.
Thanks, good. Thanks, Rian. Okay, so we need to measure that against this answer, which is 250,000. So the variance, and now I want to know, is the variance favorable or unfavorable? And why? So since we use the same rate and we applied the actual production against what is allowed, we are actually testing the efficiency of this against that. Correct. Good. Sorry, I had a blink of an eye there that your hand was up.
I was going to answer the favorable and unfavorable question, but you can go ahead and explain.
You can still go ahead. I would like to hear your answer.
I'm going to say unfavorable because
Yes.
what we the standard that we set in terms of hours spent on a specific chair, we actually over or spent more time.
Exactly.
Okay.
Exactly. Because this we have to compare with that part. That's why the prices are the same. So it means that if everything happened according to what we expected, we still would have arrived. We should have arrived at 225, but we didn't. We arrived at that because we used more hours than the standard allowed. The standard that we set. So the variance equals 25,000 and it's unfavorable. Okay, then let's quickly look at E. So E they ask, so let's quickly have a look at E, F, and G. Yes, good.
So Charles, just to understand that efficiency variance, so if we calculate the actual hours spent per chair, it's 20,000 divided by 12,000 units. 20,000 hours divided by 12,000 units. And that will give you the actual hours spent on one chair.
Correct.
Okay, I get it. Thanks.
Yeah, so efficiency is all about, did we do it quicker than did we do it quicker than what the standard said? Did we use less than what the standard says? So that's why the usage, the efficiency, and the what's the other one that they use are all the same, calculated the same. We take the price out of the equation by making the price the same. We use the standard price so that we can only see what the effect on the hours will be. Okay, so E asks the variable overheads efficiency variance in respect of overheads varying with hours worked. Variable overheads efficiency variance in respect of overheads varying with hours worked. F asks the variable overheads efficiency variance in respect of overheads varying with production. So E and F is the same. E just wants it hours worked, and F wants it with, in relation to production. And then G wants the variable overhead spending variance in respect of overheads varying with hours worked. Just tell me if I shouldn't scroll up. I'll scroll down again. Let's say 5 minutes, guys. Okay, guys, let's continue with that one. I want to get to the actual third-year question. This is just revision. So E asks, calculates the variable overhead efficiency variance in respect of overheads varying with hours. Okay. So let's quickly have a look at the whiteboard. So again, efficiency, standard rate, standard rate. So we say we want the actual hours times the standard rate versus the standard hours times the standard rate. Okay, we've already calculated that. Let's go to the information. They say the varying with hours worked is 9 Rand per hour. So we can just say it's the 20,000 hours times 9 Rand. And that equals 180,000. And on this side, the standard hours at the standard rate, or 18,000 hours is what we are supposed to use, times the 9 Rand. And that equals 162,000. So that gives us a unfavorable balance of 18,000. I'm going to continue. If there's no questions, I'm just quickly going to run with this. Who can give me the next answer? Anyone? What did you guys get? No attempt. Malcolm, what did you get the next answer? Rian, what did you get?
Sorry, sir, I'm still battling with that last one, sir.
100%. Should I give you guys another few minutes for that one? Okay. Guys, I think I'm going to stop that question there. I would like to move on to a third year level question. I will send the question on the group, and then you guys can send me your answers from F to I, and I'll mark your answer if you send it to me. I'm just quickly going to unshare and put up. Oh no, I don't have to unshare. Let's just put up the correct question. You guys, now we are moving over to question 2 of the question that I sent over WhatsApp. Just by a show of hands, are there anyone here that did not get that question? Okay, so everybody got the question. I'm going to read through it quickly with you, and then we will attempt it. So they say Calculus Limited is a manufacturer of retail till scanner screens and fully assembled scanners which it distributes to wholesalers around the country. Department A manufactures the scanner screens, and Department B assembles the complete scanners. So A manufactures, B assembles. Currently, Department B purchases the scanner screens from an outside supplier. So let's quickly look at Department A. Department A currently manufactures 10,000 scanner screens per month. Calculus Limited is currently considering buying the scanner screens from an outside supplier. The total budgeted costs per month to manufacture 10,000 scanner screens are as follows. Direct raw material, direct labor, variable manufacturing overheads, fixed manufacturing overheads, and allocated corporate expenses. Now they ask, an outside supplier has offered to supply Calculus Limited with 10,000 scanner screens at a price of 165 per scanner screen. The direct raw material are avoidable if the offer is accepted. Those are things that you need to highlight when you read a question like this. Direct raw material are avoidable. The direct labor employed by Department A will become redundant if the offer is accepted. Department A will incur redundancy costs of 50,000 before they close down. Variable manufacturing overheads are avoidable if the offer is accepted. Fixed manufacturing overheads will be reduced by 50,000 in total in the month of acceptance of the offer. And allocated corporate expenses per month for Department A will reduce by 20% if the offer is accepted. The total expenses for the company will, however, remain the same. Department A currently sells all 10,000 scanner screens to the outside market at a selling price of 200 per scanner. Staying there, let's go to part A. Determine if Department A should continue to manufacture the scanner screens or whether they should purchase them. Show all your workings and ignore qualitative factors. For 9 marks, I'm going to leave that information on the screen because I think that is everything. Can I ask you guys to please complete that for me? Or attempt it, but 6 minutes, literally. I'm not going to make, I don't want you to make it a very neat attempt. I want you to read, jot down what you think should be in and what should be out, and let's get to an answer. I just want you to apply your mind before I just start explaining. Apologies for the shuffling there. If you guys are done, you can just raise your hand, please. Is there anyone that would like another minute or two? Does that mean I can continue, guys? No one is reacting. Kholiswa? Rian?
Just give him another 2 minutes, sir.
100%.
Thanks, sir.
100%.
So will you go on? I'm ready.
Okay, are there
Thanks.
anyone else? Thanks, Rian. Are there anyone else who would like another minute? Okay, cool. So the first thing that you had to realize, this is almost like a relevant cost question. So you should have started your question something like this. There's a make or buy decision. The make, we already have all the figures, but we need to see how they change should we decide to buy. So the question already tells us if we buy it, and we obviously by using logic, we will not incur direct raw material, direct labor, or variable manufacturing overheads. But sticking with labor, we will incur redundancy costs. So let's write that there. Don't judge my spelling. There's redundancy costs. We don't have that when we make it, but if we should purchase it, we're going to incur 50,000. Then fixed manufacturing overhead. Let's quickly go to the question. Fixed manufacturing overhead, they say yeah, overheads will be reduced by 50,000. So it goes down from 100 to 50. And they say allocated corporate expenses will reduce by 20%. So in other words, it will be 80% of what it currently is. So 80,000. What else are we missing? If we buy
The
yes,
price. The price. The price of the 10,000 scans.
scans or screens, I can't remember what it was. Scanners.
The scanners.
So we're going to buy 10,000 and they are giving it to us at
165.
So that is 1.6 million.
Yes.
I think we've taken everything into account. Obviously, there won't be any cost there. And now we need to total. So if we add up the costs to manufacture, we get 1.7 million. If we add up the costs to make, to purchase, we get 1830. So what decision will we make?
So it's just one question. The redundant 50,000, why do you have to put it in a column where it says buy and not in the make column? What's
Because
your reason for that?
If we continue to make it, we won't have any redundancy cost. Remember, redundancy cost is almost like retrenchment packages.
Okay,
because
so that's why you put it in a, okay, losing, okay.
Yeah, we are losing the staff that we use to make the product. Our direct labor staff, we need to let go. So we're going to have to pay them retrenchment packages. And that is that redundancy. Well, if I can use an example, that will be the redundancy cost. And we do not incur it if we continue to make it, that cost won't be there. But if we decide to buy it, it is relevant in the situation and we need to include it under the buy option. So
okay.
The decision here will definitely be continue to make. Okay. let's quickly go to the question, back to the question. Just the required part quickly. Yes, Kurt.
On that specific part, I went a bit of a step further. I calculate the sales value for the 10,000 scanners,
Yes.
and then work out basically, say, like the gross profit from the make and the buy decision. And then that's how I made my decision to actually make, if you are following me.
I don't think there's any. Yeah, I don't think that is a wrong approach. You can do that as well, Kurt, definitely.
Because in a different scenario, they will say when you buy, your sales price is adjusted with this and this and this. And they actually want to see that calculation on the third year level. I'm not sure, but yeah.
100%, Kurt. Yeah, no, they can definitely ask that. Or they can ask it like this. But definitely there is scenarios where you have to take into account the effect on your sales. And make your decision on your gross profit percentage or your gross profit value.
Or contribution per decision.
Correct.
Yes. Thanks, Charles.
100%. So continue to make on that part. Let's quickly go back to the question. Okay. I'm going to skip B. I want to focus on C. Because this is more, some of these are more on the third year level. Just to start, we're not going to finish. I would like you guys to please calculate for me the sale margin variance. So what is the sales margin variance? So this is the formula. So I'm just going to say here, this is part A, part D. I'm just going to say here on your own. Part C. Part C asks the sales margin price variance. So there we want to see if we take the actual selling price minus the standard cost. And we minus the standard selling price minus the standard cost. See? And that answer we times with the actual sales volume. So see, we are again working with the price. The moment we work with the price, the cost part stays the same. And we are evaluating the actual sales prices. So it's for Department B. So let's quickly go read through Department B. So Department B assembles the complete retail scanners using the scanner screens and other direct raw material. The department uses a standard absorption costing system for planning and controlling purposes. The standard per unit is as follows. There's the selling price, the direct material, for the screens, the direct labor, the variable manufacturing overheads, the fixed manufacturing overheads, and then we get the budgeted allocated corporate expenses for the month of March, 300,000. The budgeted monthly sales units for the department are 10,000 retail scanners. And then we get the actual results. So I'm just going to make this a bit smaller. I'm not sure whether you guys will still be able to see. Then they say, so here we have the actual results. And they say the total fixed manufacturing overheads for the month of March 2017 were 490. And the allocated corporate expenses were 320. And there were no opening or closing inventories of direct raw material and finished scanners. Can I ask you guys for 3 minutes? Our session is almost over. Just for 3 minutes, see if you can calculate that variance. So it's the actual selling price, less the standard cost, and then the standard selling price less the standard cost, and that difference we times by the actual sales volume.
I'm finished, sir.
100%. I'm going to give you guys a few more minutes. Just put your hand up if you guys are done. Okay, guys, let's continue. So what is the standard cost? That's the first thing you have to calculate. It is what they give us. Those items added together. And then you have to work with the actual selling price. So it's those costs less the actual selling price. 460 minus 380. And then we have to use the standard selling price, which is the 450 at the top, minus the standard cost also of 380. And the actual sales volume, what was the actual sales volume?
8,000.
100%. So the answer is 80 minus 70 times 8,000, and that equals 80,000. And that is a favorable variance. Any questions? Okay, guys, if I can ask you a favor, please make sure that you've posted your student number in the chat section, and please complete the evaluation form for the session. It is attached. I would appreciate it. And then please keep an eye out on the WhatsApp group. There will be a consultation session where we're going to continue with standard costing and do the rest of the questions. Yes, Kurt.
On that answer, sorry, Charles, for holding you up. I know the session is almost over. They say the sales variance margin, if I'm correct. Sales margin price variance. So
Yes.
Shouldn't that answer be a percentage of something, Charles?
We're already working with the units, Kurt. Then we don't have to, we're not going to work out a percentage. If they didn't give us the unit price, then it will probably be a percentage, but that margin doesn't refer to a percentage. It more refers to the margin between your actual sale, your actual selling price, and obviously then the relevant costs and what the standard selling price would have been. What is that difference between the two? And that times the actual sale. So it's not really a percentage per se. It's more a margin as in what is the difference between the two? That margin, not margin as in percentage.
Okay, thanks, Charles.
Okay, guys, I have to unfortunately run to another session. If I can ask you guys to please complete this feedback evaluation form, post your student number for the to serve as an attendance, and then if you want to make use of the one-on-one consultations, please send me a WhatsApp. For those that did not take the WhatsApp number down, I will quickly post it for you if I can find it here. There we go. I've posted the WhatsApp number. I will share these notes on WhatsApp as well. And then that session that I'm going to arrange will continue to be on standard costing. So thank you guys. Have a wonderful evening. And for those of you that have auditing, I'll see you in the next session.
Thanks, Charles.
Thanks so much. See you. Thanks.
Thank you.
Bye-bye.
Thank you,
Thanks,
Charles.
guys. Thanks, guys. Bye-bye.